Guten Morgen, meine Damen und Herren. Ich werde auch in Englisch sprechen, aber zum Vergnügen hier zu sein. Herzlichen Dank für die Einladung und immer wieder ein großes Vergnügen, in Frankfurt zu sein. I would like to talk about Europe, of course, and what's ahead, certainly for the Eurozone. Looking back at the last years, we've basically seen a situation of ever-changing moods. Ever-changing moods after a period of crisis in which there was a lot of Euro doom, a period in which I ran the Eurogroup and we managed to very gradually get out of that crisis. After 5 years of deepening of the crisis, we had 5 years of slow recovery, but we are now in a completely different phase. Again, at the beginning of 2017, there was some doom. We had elections coming up in the Netherlands, in Germany, and in France, actually in a different order. And many people were concerned about the rise of populism in those countries, in our countries. Of course, at the end of this electoral cycle, there was again a moderate coalition government in the Netherlands. There was a very ambitious and pro-European president in France, and the same coalition continued basically in Germany. And so the beginning of 17, people were very worried. At the end of 17, we were again in a different phase when political stability seemed to have continued and the economy was booming. 2017 was the best year for the Eurozone since at least 10 years. And it got me quite worried when at the end of 17, even the Financial Times started talking about the Euro boom. I always get worried when people start talking about a boom because you know it's always very quickly followed by a bust. But maybe it's a good thing that at the beginning of 18 we see some normalization, some slowdown in the economic situation in the Eurozone, though I would hope it would be sustainable at the current level. In 2017, the average growth in the euro area was 2.4, far over potential growth. It was a 10-year high. If you realize that potential growth for many of our countries is around 1%, 2.4 was a very high outcome. There is consumer confidence, business confidence is very strong. Global growth in 17 was very strong. It seems to slack a little now. Financing costs have been going down. Now we see some normalization, while still so much work has to be done. In a number of our countries, unemployment still too high. Deficits have been brought down in many of our countries, but sovereign debt is still very high in some countries. And I think for many of our people, people are still waiting for the improvement of their disposable income. Incomes, salaries have been slow to react, and only now in some of our countries are they improving. The challenges, and that is certainly also true for Germany, are first of all competitiveness. I was worried by the outcome of the EMD, the Swiss Business School Competitiveness Index, only last week, in which you saw that the leading economic country, Germany, has dropped in a couple of years from the 6th place in the competitive index to place number 15. That is a reason for concern. Germany is the motor of the Eurozone and must remain to do so. The UK dropped to the 20th place for some obvious reasons, but that would also be a reason for concern given the size of that market. Second challenge, of course, sustainability requires a huge transformation throughout our societies, throughout our economy, many investments, and a huge challenge of implementation to reach those sustainability goals. Third major challenge is shock absorption. I don't think we are prepared for any future economic shock at the moment. This is true for, if I look at our toolkit, the fiscal toolkit in many countries is empty. The monetary toolkit has been used to a very large size and extent. and it needs to be refilled to prepare for any future shock. So still a lot of work to do to prepare for future shock absorption. I have to speak about Italy because Italy, when you look at the Eurozone and the Eurozone developments economically, Italy has been the outsider. GDP growth seems to be stuck now for a number of years around 1–1.5%. Inflation very much in the same area. So for the disposable income of people, there is no progress at all. Unemployment stuck at around 11%. Debt stuck at about 131%, far too high. And in the very different economic indicators, the only positive that I can see at the moment are investments, which have been strong last year and seem to continue so far to be strong. But economically, Italy is stuck in the wrong kind of corner. Politically, what's happening in Italy is, to a sense, rather comparable to what we see in many countries. First of all, there is a new tendency towards politicians that don't like to talk about the difficult choices that we have to make and don't like to confront their electorate with the difficult choices and the trade-off that has to be made in politics, but like to pretend that it's an and politics. You can have and lower taxes and a better developed and expanded social benefit system and lower pension age. Whereas you would know that that raises a huge funding issue in your national budgets. This is a tendency we see, of course, in many countries, and there Italy is not very different. And the second trend is to blame Europe. And yes, there have been mistakes. Yes, we've taken risks in developing and integrating Europe in the last decades, obviously, and lots of repairs have been done. But you cannot blame Europe for all the domestic problems that different member states in Europe have. You cannot blame Europe for the inefficiency in your economy, for the corruption in your public sector. You cannot blame Europe for the long-standing political protection of an inefficient and ineffective banking system, and so on. What I do think the Italians can blame Europe for is the lack of support we've given them in the migration issue. I won't go into it today, it's not a financial issue, but migration, I think, is at the heart of the concern of many voters in our countries, almost in all of our countries, and Italy should have received more support earlier from Europe to deal with the crisis there. The main challenge, I think, at the moment for Europe is the huge pressure there is on our open liberal economies and open liberal trade. Our trade-oriented tradition, which has been so strong since the Second World War, is being challenged inside and outside the EU. In my mind, the EU must react by taking the lead. The lead in open trade, which is already happening. More trade deals are being negotiated with Asia, Latin America. We should refrain from tit-for-tat protectionism. I don't think that's the right approach. We must be very sensible, and the German government is taking that sensible approach in the trade relation with the US. Let's not be provoked into tit-for-tat protectionism. Inside the EU, this means also for me that we must complete the internal market. If we want to raise potential growth in Europe, we must complete the internal market. There is more potential growth out there, and I think we can't let that be, we can't leave that. What does it mean for the financial sector? First, let me make some remarks about Brexit. There is a lot of creativity at the moment in London, as well as a lot of disagreement on future models of the trade relationship. I cannot see models like the MaxFac, the maximum facilitation, work. If you think about how it would have to work, the different trade tariffs in different production chains through Europe and through the UK, for me it's impossible and will be very risky for the European side. Max Fac will never happen. The special customs relationship is still undefined, and therefore I wouldn't like to go down that road, basically leaving two options. One is a custom union, the UK inside the customs union, but it will probably be expanded with a number of elements with which the Brexiteers don't like. It would be a customs union plus part access to internal market under the recognition of EU standards and regulation, plus accepting the legal powers of the European Court of Justice, plus contributing to the EU budget, etc. That is a way forward that could be going. Some people think that that is the real strategy of Theresa May. The other option is, unfortunately, a hard Brexit. I don't see many options in between. The financial sector, in any case, as Jörg Kuki said, will be outside of this kind of deal. And really here, equivalence is the only thing, the only way I see it work in the future. But again, Jörg Kuki has quite rightly said, there can never be the exclusion of the unilateral right to end this equivalence recognition, which makes it for the financial sector a risky approach. Politically, I think it's the only, and legally it's the only way that will work. But for the sector, it is, of course, not a very stable system. The only way to make it stable is if our regulators and our supervisors from the European and the British side work together very closely and minimize any divergence. I think that's possible. It will take time to build and further develop that relation and regain the trust that may now be thin. What to expect from the banking sector? I don't expect a lot of deregulation. I'm sorry to disappoint you here, but I may be wrong. There is still quite a lot to come. Of course, there was the agreement on Basel III Plus or Basel IV only in December. There was the very welcome agreement last Friday in ECOFIN on the banking package, which is about the implementation of TLAC and the European MREL, the bail-inable buffers. All of that still needs to be put in place. I think we need to look in Europe better at consumer protection, which I think is still too much national policy and requires, I think, European harmonization. I think we need to do more work on anti-money laundering and anti-terrorist financing, also in relation to cryptocurrencies. So there are lots of issues that still deserve our attention. And I think the bottom line will be that I don't expect imbalance deregulation. I think Europe is, as a whole, still overbanked. That also may not be popular here to say, but I think it's overbanked from different perspectives. In a number of our countries, we simply have too many banks. In some areas and some countries, there are still too fat banks, which simply need to be trimmed back to reduce costs, also in the light of the huge investments needed and possible in technology. And finally, we are too dependent on banks. This is, of course, the big driver behind the project of the Capital Markets Union, which, next to the Banking Union, I put quite some time in. The Banking Union would be, when you look at the reform of the Eurozone, the Banking Union would be my absolute priority. I'm positive about it. We've done a huge amount of work in a short period of time. Yes, I agree with the critics that say the US dealt with its banks much quicker than the Europeans. This is true. But once towards 2012-13, we started with the Banking Union, we have made huge progress. Also in the area of risk reduction throughout our banking industry. I think in the coming years, more countries will join the Banking Union. For some, I would welcome that very much, and for others, I would want a very thorough checkup and stress test of their banks before allowing them into the Banking Union. The work to clean up bank balance sheets and reduce the legacy issues like NPLs will continue as the political pressure stays on. And the political pressure will stay on because Germany and also the Netherlands and other countries quite rightly say there needs to be risk reduction before we take next step in the banking union. Jörg Cookies refers to the roadmap. This was done in 2016. It outlined the work that we have to do. Of course, it wasn't very specific because it was hard enough to get that deal at the time. And it's quite right to become more specific now. What needs to be done in those different areas to make progress? But personally, I would strongly advocate that the banking union is completed across all the pillars, also EDIS. But let me first make one remark about the resolution fund. I think the way we designed the completion of the resolution fund, and at the end the common backstop, and hopefully there will be an agreement on that soon, could also be the model how EDIS, the European Deposit Insurance Scheme, could be politically designed. In other words, first of all, the member states build up their own national fund, get their act together, collect the fees and have the contributions in their national funds. At the same time, in the coming 6 or 8 years, work needs to be done on further risk reduction. And at the end of that, it could become one European fund. As it is in insurance, it's always, of course, important to have the large fund allowing you to deal with any shocks. But it's also important to make sure that in the population that is insured, in this case deposits, that there are no big differences in certain regions or in certain groups in the risks that are covered by the insurance. Therefore, risk reduction is important. But let me say here, I would hope that the debate in Germany about EDIS doesn't make EDIS into a taboo. And I hope that the politicians will be courageous enough to say, in the end, if we have taken these steps to reduce risks, EDIS will contribute to a more stable and stronger framework for the banking sector in Europe. So let's not give up on that commitment. Friday's agreement is a very important step towards that. In June, there will be a very important summit. It'll deal with these Eurozone reforms. It'll deal with Brexit, and hopefully also with issues of security, defense, and migration. As I said earlier, I think politically in all of our countries, those topics, migration management, outside border control, working together in defense and anti-terrorist areas, is crucial for our electorates who are very concerned about this. And when I listen to President Macron, he puts certainly as much emphasis on those security issues as on financial and economic issues. Europe, ladies and gentlemen, cannot afford a standstill. And if the standstill is around us, if even some regions in the world are talking about steps back in our liberal economy, then Europe must take the lead. There are challenges internally and externally. I would say let's address those with small steps rather than big, so that we know what we do, that what we do is an improvement, and as long as the pace is steady and the direction is right, small steps are the right way forward. It will be rather intergovernmental than communitarian. In other words, intergovernmental, allowing national governments and national parliaments to play their role and to make sure that their national interests are still being served while we work together in Europe. And if we say that we are the new champions of the open liberal economy in the world, then we must also find that open liberal relationship with our neighbors, the British. For Frankfurt, it's a good outlook. When I go to the UK, bankers will tell me, and they won't say this publicly, of course, that the amount of business and the amount of people they're going to shift is larger than what is publicly being talked about, and Frankfurt is at the top of the list. Now, you will probably say that I'm sorry to say so from the perspective of Amsterdam, but Amsterdam is doing absolutely fine. Amsterdam is booming, and I hope and see the same for Frankfurt. Thank you very much.
Thank you, Jeroen Dijsselbloem, for these very kind words. You were willing and prepared to have a few questions answered from the open floor. Thank you very much for that. So, ladies and gentlemen, it's one of the rare opportunities to ask a man with such a profound knowledge of financial regulation a question. Who would be first? Do we have a microphone? Mr. Powell.
Andreas Powell. Mr. President, you talked about the challenges, and in particularly about the challenges of the competitiveness. Now, we have seen the tax reform in the United States. You concentrated very much so on the effects on challenges and competitiveness here in Europe. How will the tax reform challenge the European countries? Will there be a race to the bottom or something like that?
I certainly hope not. But already, of course, many governments are thinking about their corporate tax rates and talking about reductions. I think there is another process which is very valuable, and you may find that unexpected coming from an ex-Dutch minister. I think the process of cooperation within the EU on tax matters is very important. So the old taboo that tax policy is a sovereign matter for the member states, I think, is already gone, and we need to take further steps to build that competitive yet solid tax system for the larger corporates in Europe. My second point is that perhaps, of course, the tax system is one element in our competitive stance, but there are many others. And even within the tax system, there are many other topics. If I look at the Eurozone, one of the biggest tax concerns I have is the very high tax pressure on labor. The tax wedge on labor is very high. I think only Ireland is below the OECD average, which is really hindering the workings of our labor market, which is holding back, bringing in lesser educated or lesser productive part of the labor force. And I think that's also a social matter for our societies. So if we look at the redesign of our tax system, of course we must look at the competitive side, comparing with other regions, but we should also look at how the tax system holds back further economic development and using the potential that we have in our labor markets. And we're going to need that part of the labor force, but we've made them too expensive. There are other topics, of course. I would give a lot of attention to the educational system. If you talk about competition, and more investments would be needed. When you look at the Eurozone, the amount of money spent on education, let's say per student, has gone down over the course of the crisis due to all the cuts, except I think for France and the Netherlands. But this is, for the long term, of course, a negative trend. We really need to invest in Europe, in education, but also in research, development, science. I think for the long-term competitiveness of Europe, the educational system is good compared to the US, but research, development, innovation, we are dragging behind. So there are a number of issues, not just the tax, when we look at the competitiveness of Europe.
Thank you very much for that comprehensive answer. Further questions, ladies and gentlemen? It's one question over there. Can we get a microphone, please?
Because I have the impression that when Germany and France start criticizing Italy, there's the danger that the more they feel rebuked, the more they feel patronized, the stronger those populist movements will become. And I could imagine that if smaller countries like the Netherlands have a say in this, that perhaps this is more efficient than if Germany, traditionally the country that likes teaching others, knows things better. And France also seems to know things better.
I wish you were right, in the sense that I've tried to, let's say, coach some of the politics in Italy in the past. It wasn't always welcome. So whether it comes from a large or a small country, of course you're right, Germany being the largest country is considered too dominant by others, and certainly when Germany says perhaps you're not making the right choices, that's not taken well. But I think the message to Italy should not be what you are doing is not allowed because of Europe. It should be what you are considering doing. Of course, the new government hasn't come about, so we don't know what's going to happen. The plans that you are considering are simply steps back in revitalizing the Italian economy, and will risk your financial position and your financial outlook, will risk the value of your pensions and your pension funds in the future. So I think if there is no debate in Italy about the substance of these kind of policies and what the long-term effects for Italy will be, then it's never going to change. And simply saying what you're doing is not allowed by Europe will certainly have the counterproductive effect, as you say.
As I haven't seen any other hand risen, I would like to ask you a question. You said there are two options for you how Brexit may turn out. It's either going to be customs union plus plus or a hard Brexit. If you would give a likelihood to any of those options and what they would mean.
It very much depends on how the political situation will play out in the British Parliament. And anyone who has deep insights in that, please share them with me. It's very difficult to predict. So the strangest coalitions may come about in the House of Parliament between Brexiteers, between pro-Europeans, etc. Whether the government of Theresa May survives, I do not know. I do feel, looking at what's happening and how Theresa May is operating, that she's trying to steer it towards, let's say, they like to call it a customs union or a customs partnership. I think it's going to be the customs union. We don't have any other option. And hopefully it will be enhanced by even more market access agreements. And again, the financial sector is something quite outside of that discussion.
Yeah. Thanks a lot. We have one more question here from Heiko Thieme.
Hello. I thought it was very revealing, your vision for Europe. What I'd like to ask you is, if you look at our external opportunities we've got, where would you put the emphasis for Europe if we divide the world in 5 segments? North America, primarily the United States, which is a very difficult partner for us right now. South America, which remains rather difficult for the corruption issues. Africa, for the immigration issues and getting together. The Far East, China in particular, and then Russia. Plus finally the Middle East. Where would you put the priorities, and where do you see the greatest opportunities from a financial point of view while we're in Frankfurt? Where should we focus on once we deal with our internal issues?
I don't think we should wait until we've solved our internal issues, but that's I would say that the relation with China at the moment is the most interesting. If we can find the right balance between, let's say, having the same access to their markets as they have access to our markets, which is at the moment not the case. There are 2 ways to react. We could introduce in Europe a kind of CFIUS committee, which gives a political say over important, let's say, Chinese investments in Europe. Either the other approach is that the Chinese guarantee, and in practice also establish, that we have the same, and our companies and our investors have the same kind of access to their markets and to invest in their companies as they do in Europe. But I think this issue is in potential the most important Of course, this is also a reflection of the fact that our trade relationships with the US will remain crucial, and they are still and will remain, in my mind, our main partner. But the way the trade policy is playing out is going to be more and more difficult for European businesses. And I already hear this from Dutch exporting companies to the US. So I think China is strategically the most interesting. Africa, I think Europe needs to be, we're in the process of changing from, let's say, aid to trade, with more emphasis on how we can economically support those countries. Wolfgang Schäuble took an initiative, I think it was called Compacts with Africa, and many countries are involved in that. And I think that's a very interesting way to move forward, away from the more paternalistic approach of aid towards economic support and investments with Africa. It's a huge continent where the population is growing at immense speed. We have an interest to stabilize that, of course, from a migration point of view, but also economically in those countries that politically are becoming more stable. There's a huge economic potential.
So, ladies and gentlemen, thank you very much, Jeroen Dijsselbloem, for that passionate and compassionate plädoyer for Europe. Thanks for coming.